We live in a competitive real estate market these days. Now, interest rates are higher than they were a few years ago, but it is still a crazy busy market with homes selling fast and oftentimes over list price if they are staged right and priced right. So if you're looking to buy a house, but you've also got a house to sell, you really have to strategize that buy and sell combo. So in this video, we're going to give you a few tips on how you can go about doing that. Welcome back to the video. I'm Jacob.
And I'm Mindy.
Now, one of the biggest reasons we recommend buying before selling, if you're able to, is so that you can buy that new house without having one of the two home sale contingencies.
Yes, there are two different types of home sale contingencies. You have one contingency that is to sell and close on your home. And what that means is you may have your house already listed and you've come across this perfect home that you want to buy, but you're not under contract yet. So this is a contingency that is attached to the contract. It gives you peace of mind that you're not on the hook for the house that you're going to buy if you haven't found a ready, able, willing buyer for your personal home. So with that being said, it's probably even second place to this other contingency we're going to talk about if you can get a seller to take these contingencies. Because in this market, if you're in multiple offers, if you're up against an offer that is not contingent in either of these scenarios, then they're going to be a cleaner offer than you and a much safer alternative than somebody that's to sell and close on a home. The second contingency that we do have, if your house is already under contract, it's a little bit cleaner because you only have the contingency to close on your home. But that means that everything has to go smooth on whoever's buying your home. So the person that you're going to make an offer to has to be comfortable with all those different details. So as agents, we're the listing agent and we get presented with an offer like this. You can definitely work with these offers, but you just really want to look at where they're at in the process. What kind of home are they selling? Is it going to sell fast? Is it in good condition so that there's not going to be any major inspection issues that come up that buyer that they currently have isn't going to walk away? Because then you're going to end up having to either renegotiate slightly with your buyer if you're the seller and give them time to put the house back on the market, or you have the option of just going back on the market yourself if that's what you prefer to do. So there's different options. There's pros and cons to everything. And if you're in multiple offers, that's when you really want to be able to look at the options of not having to sell your home in order to buy.
Yeah, so between those two home sale contingencies, the biggest difference is your current home under contract already or not? It definitely is a big risk to the seller to accept your offer if you are contingent on either your home sale and closing or just your home closing. I mean, really, if you're in a competitive situation with multiple offers, which oftentimes these days we are, your offer can sometimes get really put to the bottom of the barrel if you have a contingent offer and nobody else that is offering has a contingency like that. So what we're going to talk about is a few ways you can strategize buying and then selling, because this does a few key things. First of all, it allows you to make offers that are not contingent, since you don't have to worry about selling your current home before you buy the next one. Second big thing it does is it gives you a lot of flexibility and some breathing room when it comes to moving, because for a short period of time, you're going to have two houses, which means you don't have to be fully moved out of your current house when you come to move into the 100%. New house. So you can take a little bit more time when it comes to moving furniture out of the current house into the new house. You're probably not going to have to put things into storage or into your parents' basement for the interim. So the first strategy we're going to talk about, and this is the ideal scenario if you're able to do this, is what's called a recast. So we're going to jump over to see what Stuart has to say. Stuart is our mortgage banker, so he is by far the expert when it comes to recasting. So I'm here with Stuart, our mortgage banker. So Stuart, if someone has a home to sell before they can buy their next one, we know that having that home sale contingency is a big limiting factor these days, and it kind of makes you a little bit less competitive. How would you go about strategizing, getting rid of that and making someone a little bit more competitive if they're trying to buy that next house?
Right. You know what, Jacob, this is a big issue in the market. Sellers don't want to see contracts where it's contingent on the sale of your previous house. What happens if your house doesn't sell? There's a limited time in the market. They don't like this at all. So we have the solution for you. Okay. You can go ahead and buy a house without selling your house as long as you qualify for this. income-wise we're talking about, put down the minimum required. Sometimes it's 5%, sometimes it's 3%. It depends on what you're going to qualify for. Now you've got a mortgage on your house and you've got a mortgage on the other house, which is a little scary to some people, but there's a little bit of time before the first payment kicks in. So keep in mind that if you close in the middle of the month, the first of the following month is when the first payment's due, giving you 6 to 8 weeks of breathing room.
Yeah.
Okay? So you put the 5% down, you got the house of your dreams. Maybe you need a little bit of time to paint the house or do some improvements. You're in your old house in the meantime. Now everything's done. You're ready to move in. Now what are you going to do with the old house? You go ahead and sell it, and let's say you make $100,000 or $200,000 or $50,000 from the sale of your house. You want to take that money and you want to put it against a loan. Now, whenever you put the minimum down on your home, you're going to pay that nasty thing called PMI.
Yep.
Okay?
Primary mortgage insurance.
Yeah, it's terrible. It's money thrown out the window, but it's required on every conventional and FHA loan. So if you go ahead and you get into a situation where you put down 5%, you're paying the PMI, the payment's too high for you, the loan amount's too high. Now you got this money, you put it against the loan, usually for about $150, we can go ahead and drop the PMI if you're under 80% of the value of the property, and we can recalculate your payment based on the lower loan amount without going through the refinance process. So if your credit went down the tubes for some reason, or your income is stopped, it's irrelevant. It's called a recast. It's a great option if you want to buy the home without selling the old one. It's phenomenal. Yep. Take advantage of it.
And so, Stuart, just to understand this process, so for a little period, someone's going to have 2 mortgages at the same time, one for the old house, one for the new house. Does that mean that someone's going to have to qualify for each of those mortgages?
They do have to qualify for both mortgages, okay? There's another beauty part to all this, okay? Let's say you put down the 5% and you have to qualify for both. By the way, on bridge loans, which they give you some of the equity of the house credit and they give you one loan for the whole thing, you also have to qualify for both loans. It's not like you can get away with the bridge, but you can't get away with regular financing. You're going to have to qualify no matter how you deal with this with your income that you have to support both payments. Now, let's say 2, 3, 4, 5 months you sell your house, you got this money, and the rates have gone down. Well, instead of doing the recast, you can go ahead and just refinance the loan for free with the bagel loan, no cost.
Yep.
And then you bring the money to the table, you're way ahead of the game. Anytime you do a recast, it takes about 60 days to get done, especially if you have PMI on it. So you have to look on when you sell the house, where the rates are, and where you want to be. The good news is, if we do the loan for you, all you have to do is call us and say, hey, we sold our house, we have this money, what's going to be the best option for us? And we'll guide you and say, hey, I would keep it for an extra 30 days. We can go ahead and get the refinance done. You'll get a rate that's 0.5% lower. It won't cost you. You bring the money into the table then. Or we may say, hey, rates are even higher. I'll put you in contact with our servicing department. You go ahead and give them the funds. You pay a small fee, they drop the PMI, and they recalculate your payment accordingly.
Absolutely. And it's great to have options, and conversations like this are what we have with our clients. So when it comes time to strategize that move, if you're selling your house and then buying a new one, please reach out to us because we can walk you through that process and, evaluate different options with you to help you find the best fit.
And I personally, within the last year, made a personal move, and I was able to be in the position that we were able to do what is called a recast. So instead of having to sell first, we talked with our lender, and that's the biggest key piece. You really want to sit down with a good lender and go over all of your financial details, because your DTI, which is your debt to income, plays a big role in this if you can carry 2 mortgages at the same time. So some people might have the separate down payment that they could make without having to touch the equity in their current home, but it may be too close on the DTI. So that's why it's really, really important, if you want to explore these options, to sit down, have a lender look at your entire scope of everything so that they can determine if you're a candidate for these types of products. And with a recast, what happens is once you get the secondary home, or the old home, I guess, sold, then you will take whatever equity you have in that home, and you can decide if you want to put all the equity back into your new house and have a lower monthly payment, or if you're going to keep a little bit of that cash to do some renovations, that sort of thing, or if you just want like a safety net in your savings account. You don't have to put down all that equity, but you have the option to. So we took the majority of our equity and put it back into the home so that we would be back at 20% of our loan, so that we didn't have that extra PMI payment. Now, we did have PMI for the first 2 months, which is 60 days. And most lenders, that is the requirement. You have to wait 60 days before you can do a recast. And typically that kind of falls in line with if you are going to wait to sell your house about the time that it's going to close and the funds are going to even be available to you. And like I said, the main reason that you would want to take your equity and pay down your new home is just to get a lower monthly payment. So in most situations, you don't have to if you want the higher payment and more money in your bank account or investments, however you want to spend that.
So like what Mindy was saying with the recast, it is optional. So for a short period of time, you're going to have 2 mortgages, one for the old house, one for the new house. When your old house sells, that mortgage is going to be paid off. You're going to net however much money you just netted from that sale. So if you wanted to lower your new mortgage payment, you can take all of that money and put it into a recast. Your interest rate is going to stay the same. So that is a big difference from a refinance, where typically you usually have to wait about 6 months to do a refinance. Correct. And then with a refinance, that is ideal if, let's say, over the next 6 months, interest rates have dropped. Let me get a lower interest rate and lower payment. You would then basically get a new loan on the house, Correct. Which is a refinance. Recasting is the same loan, same terms, same interest rate. You're just recalculating it so that it's a lower loan amount and a lower monthly payment.
It's just like basically taking that money and making that your new down payment and doing the recalculations as if you were just closing. But everything stays the same. And speaking personally doing it, it really, paperwork-wise, it wasn't much.
Yeah, and with a recast, basically, it's like you're just doing 2 down payments. You have your first minimum down payment just to get into the loan and get into that new house. And then a second, usually larger down payment once your house sells. You suddenly have your money and you can put that into a larger down payment to just drop your mortgage payment lower.
Correct.
So there's 2 kind of strings attached with the recast. The first thing is that you have to qualify for both mortgages at the same time. The second thing is that you have to have enough money as a down payment for that second house. Now, if you don't have that money in a checking or savings account or invested in the market somehow, one way you can do this is by a Heloc. So you can take out a line of credit as long as your current home isn't already listed and use that as the down payment to meet the minimum requirement.
Yes, that's a good option. You can also get a gift if you have a family member that would be willing to kind of front you the money. And I understand everybody's situation is different, but if that is an option, you can get a gift to do your down payment for the new home. And then you can pay that gift off or whatever arrangement you have once you have closed on your second home.
And the last option is borrowing against some kind of retirement account like a 401k. So those are 3 really good options. If you don't have that kind of money sitting around, get a Heloc, get a gift of some sort, or borrow against a retirement account.
And I think most retirement accounts, you can borrow the money. I'm not 100% sure, but I had another client, that's how, because they did the same thing. They did the recast. They borrowed against their 401k and they had 60 days to replace the funds. So that means we had 60 days to get the old home sold and get those funds turned back in, and there was no penalties or interest that they had to pay.
And that's one thing to highlight when you're doing this buy and then sell. There sometimes will be certain timeframes you have to stick to, like that 60-day repayment. It does take 60 days before you can do a recast.
And I think each 401k benefits are slightly different. So it's really important to do some homework before just thinking, oh, I have that option. You want to clarify.
Again, definitely get in touch with us. This is what we're here for, having conversations like this. Call us, text us, email us. We will put you in touch with Stuart if you do have a lot of questions surrounding the mortgage side of things, because it really is like you need to have a strategy session. Everyone's situation is different. Everyone's finances, family situation requires a little bit of a different tactic. So it is a very much case-by-case basis.
Yeah, and even though rates have not dropped, houses are still, we're back in the spring market right now, and things are going back into multiple offers. So you want to be as competitive as possible if this is your dream house that you're trying to secure.
Absolutely. So we've talked about a few options with recasting and different ways to get the money if you don't have those funds available. Now, let's say all the things we've talked about do not apply to you. You can't get the money for the down payment. The last resort option we'd recommend is a bridge loan.
In a bridge loan, it's still based on your DTI, so you would still need to be able to qualify to cover both homes. But with a bridge loan, They have high fees. I'm not exactly sure if there's a certain time that you have to have your other home sold. So I haven't personally done a bridge loan in a long time. Or had a client use one because I think most people realize that the fees on bridge loans are really high. The way it was explained to me, if you're in a low interest rate, when you do the bridge loan, that low interest rate goes away because it's basically covering both homes. So it's going to come up to the current interest rate today. So that means your payment's going to go higher. Now, for some situations, it's worth it. If this is the home that you really want and this is where you see yourself, everybody's hopefully going to be refining here in the next year or maybe even 6 months. Depends on what the market holds.
Yeah.
But there are benefits to using it. It's just much more costly.
So the bridge loan is good if there is no other way you can come up with that 3 to 5% down payment. We're going to look at a bridge loan. And these are usually, it's a temporary kind of financing option. Like Minnie said, high fees, you might pay several points just to get the loan. But again, if this is your dream home we're talking about and the bridge loan is the only way to get you in that, then it absolutely might be a good choice for you. If there is no other option and you're still trying to find a way to be able to buy the new house without having a contingent offer.
Now, if it's a home that has been sitting on the market for a couple weeks, by all means, most people will consider taking that home sale contingency.
At that point, it might be a little bit less competitive. You can come in with an offer that maybe has a couple more contingencies.
Right.
But when it's a home that just hit the market, it's like the first weekend of showings and they're expecting a lot of activity. That's where things are really competitive and you really want to be able to put your best foot forward in offering.
And another thing I think to consider is if you are going to do the recast and that all works out for you, when do you want to list your current home?
Yes.
So I think you want to, before you just jump on and get it listed, because more than likely, if you priced it right and you have it staged and ready and pictures are amazing, which is what we do.
Yep.
You're going to sell that home fast. So you don't want to get in a situation where you have to walk away possibly from the home you're under contract on because of maybe inspections or something popped up that was unforeseen and you're under contract with someone else on your home. You just want to make sure you're not going to end up in a homeless situation, which that's what real estate agents are there to help you strategize and talk you through that and work. There's different things we can help make sure that that does not happen.
Yeah. So when you buy and sell at the same time, what's likely going to happen is that there's going to be a period where you are under contract on two homes at once, the one that you're buying and the one that you're selling. And it can get tricky. So we're going to give you a few
and stressful.
Absolutely. It is stressful when you are under contract on two places at once. So we're going to give you a few tips to keep in mind if you're doing this. When you are under contract on the house that you're buying, it is good to then list your house if you are already cleared through inspection and ideally loan commitment.
Right. Lenders can get loan commitment back pretty quick if you get them their final details that they need.
Absolutely. So, and the reason we say that is because inspections and then loan commitment, which includes appraisal, is where deals can fall apart if things don't come up as we planned through inspections, if there's some nasty stuff on that inspection report, or let's say you have that appraisal writer and your new home doesn't appraise and you end up walking away. You want to make sure we've cleared any of those potential issues before you list your current house for sale. We understand that sometimes you have specific timeframes if you have to close by a certain date or you need to be out of your current house by a certain date. So we're just assuming if you are at least a little bit flexible, that's the way to do it. Wait a little bit to list your current house until you're basically just waiting to close on the new house you're buying.
If you can get clear to close, that's ideal. Now, that's not ideal for everybody. So again, that's where you sit down and come up with your plan, come up with the what ifs, and just kind of talk through those so that you're not like blinded by something, that you're ready for any scenario that may come up in this current market.
Yeah. And just to give you an idea, these days, we're typically seeing closing dates in as little as 3 weeks. I would say that's a pretty aggressive. Yeah, that's pretty short. So when you're buying your new house, you might want to give yourself some breathing room if the sellers allow for a little bit of a longer closing time frame, 30, 45, maybe 60 days, just so that way you can give yourself some room. That way, once you're through inspections, you're through loan commitment, you have some time to get your house on the market and then get that squared away.
And then you're not making 2 payments for more than hopefully 1 month. And there are ways to stagger things so that you can not make your first payment on the new house for typically if you close after the 5th of the month, you won't. So say we're into March right now. If we close now, you're not making a payment until May 1st.
May 1st, right. So if you close in the middle of the month, it's going to skip a month. So closing in mid-March, your first mortgage payment is going to be May 1st. If you close in the middle of April, it's going to be June 1st for that first payment.
And then if you're still, obviously, you haven't sold the old home, you're still only making hopefully 1 payment, per month. And by the time you make that first payment, you've got your house sold and closed. There's also ways you could go ahead and sell your home and ask for a 30-day rent back period. Yeah. So there are other ways to strategize. If these aren't options that we can sit down and definitely talk about.
If you're not in a position to be able to buy before you sell, the rent back period is really great. That way you have sold your house, you can still live in it for a short period and then close on the new house. That way your capital is freed up to be able to put that money down on the new house.
Yeah. Now, some people are not super keen on that just because of legality, insurance, all of those things. Some people are very willing. It just depends on your situation. If you're in multiple offers on the house you're selling, then you can probably find someone that might be willing to let you do that.
Right.
So don't be afraid to ask. And that's the thing. You can always try and strategize and work out the different scenario. Really, everybody's flexible. You just have to sometimes get creative.
Yeah. The worst they can say is no.
Right.
So there are multiple options you can go with when it comes to trying to buy and then sell. A lot of strategy can go into that, and not all of these options we talked about are going to be doable or ideal for you. So again, get in touch with us. We are practicing realtors here in St. Louis. Call, text, email. We can come up with a game plan so that you feel more confident in that process of buying and then selling here in St. Louis.
And don't be afraid to reach out to us, even if it's 6 months down the road. It's great to come up with your game plan now so that you're more educated and more comfortable when you know you're ready.
This is not the kind of thing where you want to be rushed at the last minute to buy and then sell. Give yourself some breathing room. So the more time, the better.
Yeah, absolutely. And we're available 24/7. So
give
us
touch.
a call.
Yeah. Outside of that, thanks for watching, and we'll see you in the next video. Take care.
Bye.